Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry and today is Thursday, September 16. The time is 2 a.m. GMT. And today we're going to be talking about or updating the chart of Apple. This is AAPL. One of the leaders, of course, is 30 minutes chart. Now, there is a really interesting comment yesterday after I finished with the S&P futures chart of the day, and as always, people jump in at any opportunity to mention that we keep trying to call on the top and missing on the rally. Now, if you guys are members, you will know that we've been bullish every single year in the indices, right? And it's not that we are calling a top. What we are seeing here simply people misunderstand. If you are not member, you don't understand what you are saying, and you don't understand Elliott Wave, then you don't understand what we are seeing, basically, right? And what we've been saying here simply is that we can see a larger degree pullback. It's nothing more, and we don't recommend selling either in the S&P because there is no bearish sequence, right? So we are and the warning doesn't come from last year. I mean, we've been buying the dips every single opportunity we can. If there is any opportunity to pull back, in 3-7-11 swing, even now we're still recommending it's better to buy the dips, but we acknowledge there could be a larger pullback coming because we see signs of exhaustion in the European indices like the FTSE and the DAX, right? But people, of course, misunderstand and thinking we keep calling the top and it's gonna be crashing. And while we are actually not even calling for a crash, we're just looking for a way for pullback to correct a 1 year cycle. So what do you think? It will go up non-stop without any pullback at all in 10 years, right? So it's never gonna be one-way street. It's never gonna be a straight line on the upside. It will be ups and downs, and but that's the way it is because people do not understand what we are talking about. Now, having said that, let's take a look at Apple. This is a 30 minutes chart here. So we are calling this wave 3 completed here in Apple. Again, similar to consistent to what we said in other indices as well, right? We're calling this wave 3 here, and look at the decline in Apple. We are calling this as a 1 2 3 4 5, and now looking for an ABC rally to correct this 5 ways down. Look at the momentum. You can see a divergence right here, right? And yeah, so that means this 5 ways down looks pretty reasonable, right? Pretty reasonable to count it as a 5 ways with divergence on wave 5. And also, let's take a look at the extension here. See, is below 1.618, so that's reasonable to expect that to be a wave 3 here. 1 2 3 4 5, another extension here. So all in all, I think the structure looks nice as a 5 ways down. So then we are anticipating this rally to fail below that previous peak over there, 157.2, and then from there we can start turning lower again. Now if people want to be perfect, like in terms of, oh, you're calling for until it rallies to 152 but it doesn't go to 152, let's say it turns lower before that, that doesn't mean necessarily that the forecast is wrong, right? Because you need to look at it from the bigger time frame, the bigger perspective. So what this chart is essentially saying is that as long as it stays below that peak we form in September 8, we can see another leg lower, and that's what really is the important message here. It's not like, oh, it needs to do one more leg higher first. If we go down from here, it is wrong. It's not like that, right? It is not like that. Yes, we could even end A here and start to do the B first and C. We could even, let's say, there are a couple of different possibilities in terms of the structure here. It could become a WXY, ABC, WX, and then ABC, and turns lower. But the idea still remains the same. As long as we stay below 157, we are at the risk of getting another leg lower. And that really is the key takeaway of this chart, right? Now, if we zoom out a little bit and look at the larger degree, let me take a look at the daily chart here. So this is your wave 3 here that we are calling here at 157. So if you take a look at the daily chart, you can see from May 5th we got this 1 2 and extension, right? So if you try to reverse engineer this count, that means this is a 1 and 2, right? This is a 1 and 2, and now you're looking for a wave 4 to correct this. Now what could possibly go wrong, or what could be the alternate? I can tell you what the alternate is. If you look at the daily chart, now okay, first of all, let me say the following thing. If we are correct, this is a 5 ways down, right? And that's really the main idea. If we are correct, this is a 5 ways down, which when you look at it, it looks like a 5 waves in the shorter cycle. The only way when you get a 5 waves and rally to new high again is if it does some sort of expanded flat, in which this is a C. Again, you need to understand Elliott Wave to understand what I'm talking about here. But if I look at the daily chart, right, I cannot see, or I don't see a good way to call this as a C wave of an expanded flat, right? I don't see it. I don't see, for example, how you can call this A, B, C expanded flat, for example, right? There is no good way to label it as an expanded flat. In other words, if this is truly 5 waves, I see low probability that you can have an expanded flat and go to a new high, which means that I mean the probability is saying that we should be able to see more downside as long as this is a true 5 waves, which it looks like. We could see one more leg lower at least. Now, so another possibility I can think about here is if you look at the RSI, right? You can see we make a new high here, but the RSI, the momentum doesn't make a new high, so we got a divergence over there. So you can see the highest RSI is here. So actually the other way to label it is actually labeling 3 here, and this is your 4, right? And since you already have a 5 waves down here, you can label a 5 here. Now in that case, what can happen is we not only will do another leg lower here, simply do an ABC and finishing with 4 and go higher again, but this can turn to become something bigger, because then at the least you could be ending this cycle as a 5 waves and then see a bigger pullback, right? A bigger pullback. But at the least, again, the sort of the minimum expectation move is that, assuming this is a true 5 waves, which it looks like, okay, then as long as we don't break below, as long as we don't break above 157, we should be able to see at minimum another leg lower similar in size to this. So let's assume that we're going to be doing a 3-ish rally here. Then after we finish that 3-ish rally, we should be able to, minimum expectation, see one more push lower in the C leg, which is similar in size to this. So that will be the shorter cycle expectation in Apple, right? Now it could turn to become a bigger move to the downside, but that's besides the point. The point is that as long as we stay below 157, we should be able to see at least another leg lower in Apple. Okay, so hope that is clear. And again, if you do want to get regular updates on Apple or any other stocks, indices, Forex, commodities, feel free to check our service. We have 14 days free trial. Okay, and I'll see you all again tomorrow, and have a nice day, everyone.